Okay, I think we're in live broadcast mode, or I hope so, and officially we shall start the first Real Turkey Channel live broadcast. We usually have productions edited in the studio, but because of the COVID-19 outbreak in Turkey, we're sort of imprisoned in our homes, and production crew I don't want the production crew to take the risk of having social contact. The problem, of course, is that as anywhere else, the internet lines or capacity is not sufficient, and the quality of the broadcast is going to be lower than you used to. Well, that's the visual quality, of course, because the content always sucked. It is It is 2:58 here. In 1 minute, I will be starting, and already I see people lining up in great rows, like one. And for those of you who shall attend this live, I want to tell you what I'm going to talk about. It's capital flight from Turkey and emerging markets in general, which poses a serious threat to financial stability. In Turkey's case, of course, it is worse because our initial conditions when this outbreak started left a lot to be desired vis-a-vis most of the other developing nations, emerging markets asset class. This is why I think it's important, because despite all the measures taken at home, which are not sufficient but getting better by the day, if this capital flight continues, Turkey will have a very difficult time managing its exchange rate, and there might be a devaluation underway. It all depends on Fed and when this coronavirus outbreak will end, on which I have a few suggestions as well. Okay, it's 3 p.m. Istanbul time, where Real Turkey Channel and broadcasting live from Istanbul, from the living quarters and working quarters of the home imprisoned host Atilla Yesilada. As you know, COVID-19 has reared its ugly head in our lovely country as well. As of yesterday, we had more than 1,500 cases and more than 30 deaths. But this is only the beginning, because if you plot the chart of cases against days, you see an exponential increase, and a lot of medical experts who made public statements on that suggest that Turkey could be as bad as Italy. Hoping to avoid that scenario, we still have to be careful for the repercussions of it. And I need to talk about the main weakness of Turkey in case this outbreak lasts and affects our economy and financial markets. And that problem is capital flight. The fact that financial investors are leaving Turkey in large numbers. Domestic savers are switching to hard currencies, or in some cases, perhaps even taking their deposits out of the bank and stashing them under their mattress, again, in form of gold and the American dollar. So the Turkish currency has depreciated quite a bit. And if it depreciates further, there would be massive repercussions on top of the massive unemployment wave that's underway. These repercussions are twofold. First of all, a 10% devaluation of the Turkish lira versus American dollar or the euro, or a composite basket thereof, adds 2 percentage points to CPI within a year, most of that addition coming in the first few months. Two, before the crisis, and that's what I mean by initial conditions, Turkey's corporate sector was heavily leveraged or indebted. A lot of that was to Turkish banks and contracted in Turkish liras, which are being worked out. But Turkish banks and corporates also borrowed heavily from abroad simply because Turkey doesn't have enough savings to satisfy the credit needs of the corporate sector or to produce enough deposits in terms of savings to increase the liability side of the banking system. To make a long story short, the count changes every month, of course, as redemptions and rollovers change the tally. But within the next 12 months, Turkish banks and corporates will have to pay off or borrow a new $170 billion. $100 billion of that is trade related financing, which will be secured anyhow because the collateral is the goods and services that are being traded. And usually the counterparty provides a guarantee as well. The problem is the rest, which is the funds we have borrowed from abroad and used for domestic investments, unfortunately, largely in industries which don't produce exports and therefore hard cash, such as real estate, consumer goods, or retail. Therefore, any depreciation of the Turkish lira versus dollar and or euro increases the financing expenses of Turkish corporates, reduces their interest coverage, and therefore makes it difficult to borrow from home at reasonable rates. This is how Turkey stood at the beginning of the COVID-19 outbreak. But we have a global problem which defines the circumstances under which we shall operate in the coming months. And that is, currently we're in the midst of a financial panic. Investors are selling everything. The safe haven changes every day. One day it's dollar, one day it's gold, one day it's American government bonds. The VIX index of volatility is over 60, which is the last time we saw in 2008, 2009 great financial crisis. There are two reasons why measures taken by Fed and other reserve money central banks to stop this panic. And of course, United States is still debating its aid package in the Congress, but Germany, Britain, Australia, China, of course, have already provided budgetary support. That's fiscal stimulus to compensate for the falling economic activity and to provide relief for small, medium enterprises and for the potentially unemployed workers. But there are two things we don't know. A, how deep will be the damage on the world economy? B, when will this coronavirus outbreak end? Now, regarding the first, we get very rapidly changing forecasts from supranational institutions that do research, such as IMF, OECD, International Institute for Finance, or major investment banks like Goldman Sachs, Deutsche Bank, JP Morgan, etc. I have been in this business for 30 years. I've never seen the forecast for 2020 and 2021 to change so rapidly. In fact, now there is a consensus that the 2020 is a last year in the sense that there will be no growth and potentially some bankruptcies. According to Moody's, up to 10% of corporate bonds may go to default vis-a-vis 2.25% in 2019. But we don't know how deep this recession will be. And this is very important in terms of evaluating financial assets. We know that the recessions which would start from China, United States, EU, etc., would impact poorly on emerging nations. And how much, we don't know the answer. For instance, so far, up until last week, India seemed to sort of bypass this pandemic. So is Indonesia. And suddenly, the COVID cases started proliferating in these two countries. India is the fifth largest economy in the world, and Indonesia is the fourth most populous. So suddenly valuations change. If you assume that India will have a full-scale outbreak, then you would, reduce your growth forecast. And since Indian financial assets have a share in the global EM indices, you would tend to assign less value to these countries. The same goes for Indonesia, and Russia probably underreports its cases. So we don't know how deep the recession will be. The second problem is we don't know how long this will last. There is this misconception that the coronavirus, like other coronas, dies off in the summer, and whether we do anything or not, it will be blow over by summer, which is simply not true. There is no consensus in the medical community that this coronavirus is similar to others in terms of its reaction to temperature and climate. And I think given the fact that we are seeing increasing caseload in hot and humid Africa, and to a lesser extent also an increasing caseload in Latin America, which is supposed to be in summer now, or autumn, I'm sorry, there is really no guarantee that this coronavirus outbreak will end over the summer months. If you ask my opinion, the weak underbelly here is India, in the sense that because of the poverty, there are poor hygiene habits, people are crammed into very tight living quarters in slums. The ability of the government to organize and disseminate information is rather limited, and it has 1.6 billion people. If it falls prey, excuse me, to coronavirus outbreak, then because of commercial or personal contact, the neighboring countries will be in jeopardy as well. And one of those neighboring countries is China. Another one is Pakistan, and then Afghanistan, which means that if India starts spreading the virus around through Pakistan and Afghanistan, it will spread to Central Asia, and we will have another go-round. So in my view, the best forecast for this outbreak, this global pandemic, to end is not before the end of 2020, assuming some kind of medicine, or 2021, the first half thereof, assuming there's a vaccine that will be found. So I'm rather pessimistic on the outlook, both for the world economy and for the world financial markets, which seem to be pricing Fed moves, but not the actual damage of human economic damage that coronavirus may extract on our poor planet. I'm sorry for this extremely lengthy intro, which may or may not have much to do for Turkey, but to explain what might happen to Turkey in the coming days, it's very important to understand the context in which we are operating. And what I've just explained in about 10 minutes about the global economy and markets, financial markets, emerging markets in particular, has a meaning for Turkey. It means that we should be prepared for a prolonged recession, not only caused by the coronavirus outbreak at home, but also because our tourism and export industries will be hurt by the ongoing outbreaks in neighboring countries, in our main trading partners, such as EU. Secondly, we should also be prepared that even if Turkey and its administration does its best in terms of controlling coronavirus, if the sell-off in the emerging markets continue, people will sell their assets in Turkey too, because it's a panic attack, and people, the investors don't discriminate much. I'm sorry, once such a panic attack starts. Now, Turkey has lost, that is, financial investors have sold $7.5 billion worth of equities and bonds over the last 12 months. So already we had a capital flight before COVID-19 started. Turkish banks have rolled over only 74% of their maturing foreign currency loans, and the Turkish corporate sector only 98%, which means instead of renewing our borrowing facilities, we're paying off some of our debt, which is good news because Turkey was over-leveraged. But unfortunately, at a time like this, when we now need the money, banks need more money now so that they can extend, expand the maturity of the loans to businesses who will not be able to pay, to make new loans to stressed businesses or to individuals who are temporarily unemployed. Their ability to borrow from abroad is rather limited. The same goes for corporates. Since their domestic cash flow is hurting badly, they would have tapped the international markets for their long-term financing needs had international markets not almost entirely shut down for low credit rating countries like Turkey. Turkey is a non-credit rated country, which means it has a credit rating grade of double B or less, depending on the credit rating agency. And finally, as I've said, because of the low confidence in the government and in the future of the economy, 52% of the deposit base in our banks is in hard currency or gold terms. And now, if things get worse, as people do everywhere, our savers may withdraw their cash from the banks and want to keep them at home or in their vaults, which would add to the funding squeeze. And this is why I'm saying that capital flight from Turkey has reached alarming dimensions. As I speak, because of Fed's recent moves, which essentially amounts to expanding its balance sheet infinitely and making swap lines with other central banks so that no one suffers from dollar shortage. The financial markets have improved somewhat, but this is transitory. As I speak, the key dollar Turkish lira pair was trading at around 650. It is difficult to say when it will lead to a blowout in inflation and bankruptcies in the corporate sector, but let's say another 10% from here, which would put dollar TL at 7.10, would hurt both the Turkish economy and financial stability extremely badly. The unfortunate problem is over the last 12 months, central bank may have spent $40 billion of its already insufficient reserves to defend the Turkish lira against the dollar at these levels. It does so stealthily, that is through the state banks, but we can follow its balance sheet to find out how much its net reserves are melting down. So we have spent our dry ammunition before the COVID virus started. Now let me give you the bad case scenario, which I find realistic and which really concerns me, which is that the coronavirus outbreak will continue in Turkey, not only through spring, but summer months. The economy would suffer a very severe blow. This would have, of course, repercussions on market confidence, and markets will continue to sell off. I don't really care about the equities or bond markets. They're not that economically important in Turkey. But the pressure in the exchange rate or currency market would escalate to the point where central bank or state banks will not be able to defend the Turkish lira. In that scenario, we will experience another bout of massive depreciation, which would, in a month or two, pass through to inflation and then to corporate balance sheets, which will suffer from mass bankruptcies. And whether this scenario materializes or not is really out of our hands. Our administration is working. It's not doing its best as far as I'm concerned, which is a subject matter of another video. But the measures taken so far to prevent unemployment and bankruptcies among small and medium-sized enterprises are generally deemed to be insufficient. And on top of that, the situation really depends on what the large economies do to save their markets and whether the coronavirus really goes away in summer. Assuming that, like Turkey, other countries would also be behind the curve in terms of averting the economic damage uh, as the coronavirus outbreak continues. And because of India and Indonesia, in my view, the spread will broaden and get worse over the next few months. Turkey should be ready for the worst case scenarios. This is Real Turkey Channel, and I'm the real Atilla Yesilada. Don't confuse me with the Chinese-made Atilla Yesiladas, which proliferate nowadays in the Turkish market. I want to thank you for watching and listening to this broadcast, and we will evaluate the results, and hopefully soon we'll be in front of you with more bad news from Turkey and the rest of the world. I am now going to hang myself or take some malaria medicine, hoping it will cure my COVID-19. I wish all of my audience and to the entire world a safe tomorrow and keeping your social distance from others. Bye bye now.